Yo, YouTube, what is going on, man? It is your boy AJ, and we're back with a video. Today is actually my first streaming video where I'm actually showing y'all the trading charts, which is pretty cool. Um I want to show y'all how I walk through my typical morning. How do I get my trade set up and my whole process? So I'm just gonna get into it. Not even gonna waste no more time. So I come to the market every day at 9 a.m. So what does that mean? Anything before 9 a.m., I'm not concerned. When I want to get to the charts, where trading go right now, I immediately jump to the 15-minute time frame at 9 a.m. So we're just going to play this out here. But before I even get started, I like to mark out previous days highs. If there any type of previous days lows I need to be aware of, the midnight open, um, the true session open. So I'm gonna go ahead and mark those out. So let's first mark the midnight open, which is going to be 0 right here. Let's see here. This should be the midnight open right here. Boom. So we're gonna do that line. Let's put a magnet for the midnight open. And then let's make this dashed. Let's make this a dash line. Can we make this a dash line? Okay. Then we want to label this. Let's see here. This is going to be the midnight open. I hope y'all are having a good time. Labor Day weekend coming up. I don't know if y'all got plans, but I am looking forward to all this good barbecue. That's for sure. I am looking forward to all that. Now, previous day's high. Where are we at here? Let's see here. What was the high for the day? This is like the high to y'all? Previous day's high? This is Monday. This is the high for Tuesday. We want to find Tuesday's high and plot it. So that will be right here. Tuesday's high. And let's dot this. Let's call this PDH. This is the previous day's high. And then true session open, that's going to be at 7:30 a.m. So the open at 7:30, it's going to be right here. Let's do this. True session open, TSO. We're going to abbreviate that. All right. So we got our previous days high marked out, our midnight open. Previous day's high can be a draw on liquidity. It's a good places to go short. Midnight open, you just want to know where you are in terms of price. So if you're below the midnight open, typically you're going to be bullish, or the best time to be bullish below the midnight open, and best time to be bearish is above the midnight open. Those same concepts apply for the true session open as well. So if you're below the midnight open and true session open, you are in an extreme discount. Okay. Also during this time, I like to try to note any fair value gaps that stand out where I'm getting some type of reaction. So if we look at our charts here, I think this is pre-London session right here. We have this. Let me see here. It kind of looks like a fair value gap right here. Let me see here. Boom, boom. Yep. Let's draw this out. Take this magnet off. This is my first video, y'all. So we may be a little bit rusty on a few things, and I'm just gonna ask for y'all to work with your boy. You know, we doing the best we can. This looks like a nice fair value gap right there. All right. So we got a bearish fair value gap, and that's pretty much the only thing that stands out. I don't want to make the charts too crazy. So at this point, when I come to the charts at 9, I basically say, all right, where is price most likely to go? Where am I in comparison to the midnight open, true session open, any previous day highs or lows? Did we take liquidity? These are the questions that I'm asking myself, right? So I see as I scroll over, we've already took liquidity. So now I'm looking for price to make a fair value gap, right? On the 15-minute chart, I'm looking for price to show momentum and to have a nice sized gap in order for me to get long. So we're at 8:45 right now. Again, we're coming to the markets at 9 a.m. And you want to come to the markets. If you come in at 9, you really want to come around like not 9, but 8:50, just so you can see how price is forming around that time, because you may get a trade opportunity right at 9, depending on how price action is going. So this is exactly what happened. I think we end up doing a 1K on this trade. So what happened is this 15-minute, and once this candle opened, it immediately formed a huge fair value gap here, a bullish fair value gap. All right. So boom. Let me draw this a little bit better. So that's our bullish fair value gap. So what we did, when I see this, if we form a nice size fair value gap like this after we've taken liquidity and we're below the true session open, below the midnight open, right? I'm immediately dropping down to my 1 minute time frame, and I'm trying to get in on a fair value gap, right? So I'm going to take it back here. As soon as this happens, right? Let me see here. This is at 8:52, so we're going to go up to 9 o'clock, right? I'm looking for price to make some type of fair value gap. And if I can get in on a fair value gap, especially after price has touched this 15-minute fair value gap right here, I'm going to have a better chance of winning in that trade, because I can use that 15-minute fair value gap as leverage. So I'm looking here, and we do have a 1 minute fair value gap. We're going to see how price reacts to it. Can you guys see that right here? Let's see here. Again, this is my first video, so I appreciate y'all for showing the support, showing the love. Make sure you like this, like it for your boy. We're gonna get a lot better as we go along. We keep making these videos, so just bear with your boy. So here we go here. Let me make this a different color. Let's give it a green border. It's a bullish fair value gap. I probably should make this one green too, because these are bullish fair value gaps. Okay. So here's the 1 minute fair value gap forming right here. So let me just type in FVG so you guys can see what that is. Boom. So here's the 1 minute 1 minute FVG. Let me type in 1 minute, and then let me label this for y'all. 15-minute FVG. Okay. So again, I'm trying to get long, and as soon as this price comes down and taps into this 1 minute fair value gap, I'm preparing to go long, right? And all my risk to rewards are fixed. You can actually see, if everything I've traded in my templates. So I used to trade a lot of Forex Um, so this is kind of like a position I created, but it's actually the same risk management I use for gold. So it's actually 50 tick stop, 100 tick take profit. So that's going to be set at the 1 minute fair value gap. And then we can kind of just watch this play out here, right? We're below our midnight open. We're below our true session open as well. If we go back to the if we go back to the chart here, we can actually see that we are now long, and watch how this plays out. Okay. Boom. Okay. We actually tapped right into that bearish fair value gap, had a retracement. So that was the 1K trade. I prefer to actually have the same fixed trade every time I step on the screen. So like a lot of people, they're going to have huge wins, right? They may make, 13, 14K. They may scale in, they may have a 22K day. They may have a 10K day, right? And those days are coming. But what I like to focus on doing is making 1K per trade. If I can make 1K per trade and win 1 to 2 trades a day, I mean, I'm happy, right? And that's just where I'm at right now. Obviously, that's going to grow and it's going to continue to mature as I go along this journey in this process. But I'm not in the markets trying to scale in positions. Once I get my fixed target, I'm out. So if I make $1,000 and it continues to goes up and I would have made five, I mean, I don't care. I want to have a fixed reward ratio every time. It's good for my psychology. Again, that approach may not be for everyone. Or if you're a more seasoned trader and you've been doing this for 15, 20 years or even longer, you may have a different approach. Or, you can be doing this for 10, 15 years and that still may be your approach. Like, who knows? It's all about what works best for you. But for me, what works best for my psychology is I like having a fixed reward ratio. So that's it, y'all. That's was the 1K trade on gold. That is how I frame my trades. Again, I'm coming to the markets at 9 o'clock and I'm looking at just simply where is price most likely to go. Did we take liquidity? Did we take out a previous day's high or session low? Right? Are we below or above the midnight open? Are we above or below the true session open? These are all things you need to take in consideration, right? And if you are doing this consistently, you're going to see results. Like I said, I'm still learning myself. I am still learning how to do this, right? But these are some things I've implemented in my trading to, make me a little bit more consistent. And hopefully this helps you. I'm going to continue to make more videos on my framework and just my approach throughout the day. Tomorrow is August 29th. I will make a video on my approach for the morning session. New York is what I trade. So again, I hope this video was helpful. You can take something from it just on how to frame your day. There's a lot of concepts here that a lot of people I think get overwhelmed by, right? So for example, whether you trade ICT concepts or supply and demand, honestly, we're here to make money. I don't give a damn what you're trading. If you're making money, keep doing what you're doing. But one problem I will say with ICT students or people that follow ICT, they try to take all of its concepts and just stuff them into one trading plan when it doesn't work that way. There's a lot of aspects in ICT concepts that I personally do not prefer to use because I haven't capitalized or been able to make the application or adjustment to use them in my trading. One example, the new day opening gap, the new week opening gap. I've back tested and I've seen where, the new week opening gap is more, price is more sensitive at certain times. But also I've seen that, price sometimes will just blow right through it or it may blow right through the new day opening gap, right? And I'm not saying it doesn't work, but that's a particular aspect of his concepts that I personally don't use, right? I prefer to stick to previous days highs and lows, the midnight open, the true session open, and then fair value gaps. I like to keep it as simple as I possibly can, and that's for me because the more simple I can keep it, the more consistent I can be, the more or better my psychology is, which ultimately helps me to execute consistently. So, again, y'all, that's it. I hope you guys learned a little bit of something, and I'm looking forward to these next videos, man. It's one hell of a journey, and I'm having a lot of fun doing this and making these videos for y'all. This was my first video, first of many, so we're gonna get going, and I'm gonna let y'all get to it. If I don't see y'all or y'all don't come back to my page till after Labor Day, be safe. And it's always a pleasure. It's your boy AJ, man. I'm out of here. Peace.